Welcome back to another video. My name is James. This week I'm going to be talking about due diligence. I was going through a video on rent-to-service accommodation and someone asked about the kind of due diligence it is that I put together and that I send out to investors. How does all that work? How do you actually present a deal to an investor? A lot of people always ask me, James, how do you package a deal? How do you make it attractive? I've got a house, I think it makes money, how do I get it in front of someone? Now, typically speaking, you don't want to give away all of your information in one go to an investor. So when I send out an email, you kind of get an overview, a headline figures of the actual deal. I'm not going to tell you where it is. I'm not going to tell you what street it's on. I'm not going to tell you what the address is. I'm not going to give you any photos. And also the reason I do that is twofold. One, I need to protect my interest. I don't want to give away a deal without someone paying me and then they're just cutting me out. That's one. The second reason is because I don't want to work with people who are concerned about the colour of the wall in the kitchen. That sounds a bit over the top, but it's true. Ultimately, you don't need to see the photos to know whether or not an investment is good. A good investment is not judged on how it looks, it's judged on what the figures are. And ultimately, the figures are really the only thing that matter. That means that your figures need to be spot on and need to back up every single one of them. So, what kind of due diligence do I do in my deals and what do I show to investors? Well, the exact same thing. What I show to investors is what I have done to know the deal stacks up. So let's say we're going to do a buy and refurb refinance deal. What kind of due diligence would I want to be showing there? Well, ultimately, the easiest way that I can demonstrate this is just pick your return on investment sheet, start at the top and finish at the bottom, work down every single figure. How can you back up the figure that is there? So initially, your purchase price. Let's say we're buying a house for 50 grand. Number one, is it worth 50 grand? If it's worth 40 grand, I'm not going to pay 50 grand for it. I'm not going to pay more than 40 and I kind of want to get it for 30. Is it worth what you're offering? Number two, have you had the offer accepted? Or if you haven't, how confident are you the offer is going to be accepted? If it's on for 100 and you want to offer 50, it's highly unlikely you're going to get it accepted. If it's on for 80 and you want to offer 85, there's still a decent chance that it will be accepted, but you need to know, have you spoken to the vendor? Have you spoken to the agent and said, look, I'm really going to be able to offer about this. Do you think that's going to be of interest to them? Should I even bother booking a viewing? If they say yes, then great. If they say no, then no. But once you're there and you're in the room with the agent, you're speaking to them or with the vendor, get an idea for what it is that they'll take. They'll never give you the exact figure, but you're going to have a good range, a place that which you're going to be confident in. Now, ideally, you want to have that offer accepted. I personally have all my offers accepted before I send them out, so I know what it's going to be. The only time that isn't true is if it's an auction house. If I'm buying a house that's going to go to auction, the minute I put that offer in, I've usually got about 3 hours to send over holding deposits and ID and things like that. Now, if I haven't sold the deal, that's very, very challenging. So usually what happens is I sell the deal on the basis of what we could offer, and I start low and we bid up to that. And if we hit that, then great, we sell it. If we don't, then we don't. Auctions are a little bit different, a little bit more complicated. You need a different type of investor, and you need to understand auctions and the house and the strategy and the market completely inside and out in your own right. And then you can need the due diligence to back it up, because there's a lot more risks involved with auctions, and reality is not that easy to source them on. You're much better sticking with either modern method, repossession sales, probate sales, or even just standard private treaty. That's really where you want to be going down. That's the route you want to be going down. So that's how you do your price. Rents. What does it rent for? Can you prove that? So obviously, if you're looking at HMOs, spare room. If you're looking at single lets, then you're going to be looking at open rent. But not only that, you need to have spoken to a management company. Now, you need to know that one, that people are willing to manage it, and two, that your rents are right. So ring up as a tenant and say, look, I'm looking for a 2-bed house in the area or something like that. How much would I be looking for? You know, act a bit confused. Act like you haven't got a clue what you're doing. If you sound professional and slick, then they're like, you're not a tenant. If you're a bit sort of, they take you much more seriously. So there's a top tip when you're speaking with agents as a tenant to get them to believe you and to give you some genuine answers. Let them help you. Let them feel like they're selling to you and that they're helping you and doing you a favour. In reality, they are, but they feel like they're speaking to a tenant. You're going to get a couple of bits of information there. Number one, how many different properties have got available in the area? What's your competition looking like? Two, are they filling them? Do they think that, we've got nothing around, like we'll get something like that, they just go straight away. Can we get your contact details and I'll let you know if something comes up? And number three, what are they like to tenants? Are they nice to tenants? Do they drive them away? Do they do the checks? Do they ask them about jobs and references and smoking and pets and children and guarantors? All this sort of stuff. Like, are they actually concerned about what kind of person they're putting in a house, or do they just want anybody? And then you can go online or speak to a different person or have someone else ring in as an investor and ask exactly the same questions, like what do they do to look after tenants? What's the market like? What's the rent like? And then what do they charge? What kind of options do they have? So we always go for 100% full management. How much is that charge? 10%, 12%, 15%? Whatever that is, that's what goes in your figures. Moving down your sheet, what's the next thing you're going to be looking at? For me, mortgage. Can I get a mortgage on this house? What's my interest rate likely to be? And all these sorts of questions, you're like, oh, I don't know. Speak to your brokers. Why you have power teams? Ask your broker, say, look, it's an HMO, it's 130 grand. Can I get a mortgage on that? They'll say, yes, you can. What kind of interest rate are you going to be looking at? They'll probably say somewhere between 3 and 4%. That's pretty standard. What if it's a house that's 36 grand and it's got Japanese knotweed in the back? No, you can't get lending. So you can't put lending down on your figures. You've got to make sure you check all this sort of thing. Obviously, I'm going to know if your investor can get lending. That is not your responsibility. Ultimately, all you need to do is check the house is suitable for lending. As long as that is the case, the rest is on the investor. Moving down, refurb. Have you got a refurb on the house? On a buy refurb refinance, there's always going to be a refurb. How much is your refurb? How have you backed that up? 1, have you done everything you need to do to ensure that you can get the uplift in value? 2, have you solved every problem you need to solve? 3, have you had a builder back up those figures? And 4, have you included some contingency and miscellaneous costs for things that you haven't considered? You need to have all 4 of those covered, and you need to make sure that your refurb is actually legit and it actually works, and you haven't just made the figures smaller so the deal stacks up. The refurb needs to be right. So how have you backed it up? And whenever I do this, I just collect the information. So get a quote from the builder, they give you a piece of paper. Have you accounted for everything? Go through and check everything that you've got everything. You know, have you accounted for door frames, for sockets? Does it need a rewire? Does it need new plumbing? You're taking a gas fire out? Have you got a vent in the toilet? All these sorts of things. Now, if you've genuinely taken a build around and they'll help walk you through it, but ultimately, it's down to you to make sure you've got everything, to make sure that the house is actually going to refinance to where you need to be. And part of that is making sure you cover everything. You know, if you do a £2,000 refurb of the house, you're going to paint all of it, you're not going to get a high valuation. The value is going to come in and go, well, it's exactly the same as it was before. Why should I give you any more money for a house that you haven't done anything to? Or if I'm going to give you more money, I'm going to give you the £2,000 you spent to refurb it, to paint it. So when you're looking at buy, refurb, refinance, you need to make sure that you are doing significant work to add significant value. If you're looking for a £10,000 or £15,000 increase, then you're only going to have to do a few £1,000s worth of work. If you're looking for a 50 or 60 grand increase, you're going to need to do some major work onto that house. If you're going for commercial valuations, have you gone for high end? Have you got big rooms? Have you got acoustic walls if you need it and fire eggs and things like that included? Have you got en-suites? Have you got enough en-suites? Is there enough communal space? If you're looking at HMOs and stuff where you've actually got physical compliance you have to hit, are you hitting that compliance? Is your kitchen big enough? Do you have enough bathrooms? Make sure you've accounted for all of this within your refurb, and then collect it, document it, and include that in your due diligence pack that you hand to your investor after they buy the deal. End values, GDVs. Have you worked them out correctly? So if you're looking basing it on sold comparables, you need to find at least 3 properties that are sold within the last year within a quarter of a mile that are similar, like-for-like houses in good condition, well, probably the best condition if you're looking for a standard buy refurb refinance, the top of the market. What are they selling for? Is yours about the same size? Is it smaller? Is it bigger? Are you going to get the same valuation? If you really can't work it out, how can you back up that your valuation is right? Have you spoken to agents? Have you looked at the price per square foot? Have you looked at the difference between a 2 and a 3 bed and said, well, 3 beds are worth on average 10 grand more, so a 4 bed is worth 10 grand more than a 3 bed? And the last thing, if you're really stuck, have you got a RICS valuation? If you're looking at bigger properties, bigger deals, then you can look for RICS valuations because usually the deal can soak up the cost. If you're looking at a standard buy for refinance, you shouldn't need a RICS valuation. And if you're not confident on your valuation, don't sell that deal. And at the very least, lower your expectations and get it to a point where you can back it up and say, look, well, it is going to be worth this, but we think we're going to get more. That's fine. You're always conservative with your figures, but make sure you're not lying and make sure you can back everything up. If you can back everything up and you've got the paperwork, you've got the screenshots and everything to support what it is you're saying, then you're okay. But make sure that you can do that. And finally, is the return on investment calculation itself. Have you included everything? Is your spreadsheet right? Check your maths within your spreadsheet. Check your deposits 25% and not 5%. Check that you actually accounted 10% for maintenance and voids. Check that your bills are included if you're doing an HMO. Check that you make sure you've included absolutely everything, and then make sure your maths is correct at the bottom. Make sure your formulas are right, you're not missing cells or anything like that. At that point, you have everything you need to form this pack that you want to give over. So how do I package a deal? I find a deal that I like. I put those headline figures, those key aspects, some selling points about the deal, that goes on my email. When I'm speaking to a client, I'm going to describe it, I'm going to tell them what I've done. Once they're ready to go ahead, or if they're ready to go ahead, after they paid the fee and signed the contract, I send over what I call a disclosure document. Now in there, I have full disclosure of the deal and all of my due diligence. So it's going to give you the right move link, it's going to give you the full address. I'm going to give you sold comparables, give you rental comparables, I'm going to give you the breakdown of all the work that we're going to be doing and how much it's going to cost. I'm going to show you the breakdown of our return on investment, all our maths, our calculations, let's back all of that up. When it comes to compliance, I'm going to give you a local contact in the area who will say, yes, this will rent out, yes, this is the compliance that needs to be done, and this is what we know about the area. When it comes to build work, here's the builder we're going to use, here's his number, have a chat with him, ask him about the deal, ask him about the work that needs to be done. There you go. And the last thing that I always include is a full video tour of the inside and outside the property. So if someone's buying a deal and they're not going to be able to go view it, which most people don't, then they have something that they can go, oh, okay, I can see what it looks like going around the house. Now it's important here that you shoot the video in a way that when they're looking through it, it feels like they're walking through. So it's one video, they can get their bearings, they can see. Now if there's damp on one bottom of one wall, and you said it's a leak from a washing machine on the other side, the video should show a washing machine on the other side of the wall. If there isn't one there, then clearly you don't know what you're talking about. So when you're videoing your houses and you're getting all of these reference points and you're showing this to an investor, make sure that the video stacks up with what it is that you said. And your video shows everything about the house. It's not there to hide things, it's there to show them that you know what you're doing, that you have seen the problems, and you're accounting for them, you're solving them, and there's your deal. And ultimately, as long as you can do that, and you put all of that together, and you just format it nice in a Word document or whatever it is that you like doing, and you send that over, that works really, really well for me, and that's what I call a packaged deal. After that, it's just a case of hand-holding and looking after the investor, making sure they've got everything they need. But the packaging process is just all the due diligence you're going to do anyway to make sure the deal stacks up, writing it down, getting screenshots, getting emails, getting pieces of paper, getting videos, and sticking it on one document saying, there you go. And that is how you package a deal. Thank you so much for watching. I hope that's answered some of your questions, and I hope if you're looking to go into deal sourcing, that explains a little bit more about the process and about how we do things here. Please click the like button, please subscribe, and I can't wait to see you next time. Have a great week.